Welcome to Insight Vortex, your source for deep, powerful, and constantly evolving insights into the cutting edge of science, technology, and business. In today's episode, we'll be unraveling the captivating story of Deutsche Bank, once a titan of the financial world, now struggling to regain its former glory. Deutsche Bank's meteoric rise to prominence was followed by a dramatic fall from grace, marked by scandals, financial crises, and a loss of confidence from investors and clients alike. But what led to the downfall of this once dominant financial giant? How has the decline of Deutsche Bank impacted the global economy? And is there a path to redemption for this beleaguered institution? Join us as we delve into the fascinating story of Deutsche Bank, exploring its rise, fall, and potential future. We'll also draw comparisons to Credit Suisse, another financial powerhouse grappling with its own set of challenges. So, buckle up and get ready for an intriguing journey into the world of high-stakes finance and the tumultuous tale of Deutsche Bank. Deutsche Bank, once a titan of the global financial industry, has a rich and storied history that dates back to its founding in 1870. Established in Berlin, the bank was created with the primary goal of facilitating trade between Germany and other countries. Over the years, Deutsche Bank played a crucial role in the German and global economies, becoming a symbol of the country's financial prowess and influence. In its early years, Deutsche Bank focused on financing foreign trade and promoting German exports. The bank quickly expanded its international presence, opening branches in London, Shanghai, and other major financial centers. This global expansion helped solidify Deutsche Bank's position as a key player in the world of international finance. A significant moment in Deutsche Bank's history came in the early 20th century when it played a major role in financing Germany's industrialization. The bank provided funding for the construction of railways, steel mills, and other infrastructure projects that fueled the country's rapid economic growth. Deutsche Bank's involvement in these projects not only contributed to its own success but also helped lay the foundation for Germany's emergence as an industrial powerhouse. Throughout the 20th century, Deutsche Bank continued to expand its reach and influence. In the post-World War II era, the bank played a vital role in the reconstruction of the German economy and later capitalized on the economic boom of the 1950 and 1960. During this period, Deutsche Bank diversified its operations, branching out into retail banking, asset management, and other financial services. By the turn of the 21st century, Deutsche Bank had grown into one of the world's largest and most influential financial institutions, boasting a vast network of branches and subsidiaries across the globe. The bank's reputation as a powerhouse of the financial world was further solidified when it acquired Bankers Trust, a major American investment bank, in 1999. This acquisition marked Deutsche Bank's entry into the lucrative world of investment banking and signaled its ambition to compete with the likes of Goldman Sachs and J.P. Morgan. One of the key factors in Deutsche Bank's decline has been its failure to adequately address regulatory issues. The bank has faced numerous investigations and fines from regulators around the world, including a $7.2 billion settlement with the U.S. Department of Justice for its role in the 2008 financial crisis. These regulatory issues have not only cost the bank billions of dollars in fines and settlements but also damaged its reputation and eroded trust among its clients and investors. Another significant factor in Deutsche Bank's decline has been its involvement in a series of financial scandals. In recent years, the bank has been implicated in various high-profile cases, such as the manipulation of the London interbank offered rate, LIBOR, money laundering allegations involving its Russian operations, and its dealings with controversial clients like Jeffrey Epstein. These scandals have further tarnished Deutsche Bank's reputation and raised questions about its risk management practices and corporate culture. Poor management decisions have also played a role in the bank's decline. Deutsche Bank's aggressive push into investment banking, particularly in the years following its acquisition of Bankers Trust, exposed the bank to significant risks and ultimately led to substantial losses. Additionally, the bank has struggled to adapt to the changing regulatory environment and the rise of digital banking, leaving it vulnerable to competition from more nimble and innovative rivals. Deutsche Bank's recent financial performance has been a cause for concern among investors and analysts. The bank's shares have fallen dramatically in recent years, and its market value has plummeted from more than $50 billion in 2007 to less than $20 billion today. This decline has raised concerns about the bank's stability and its ability to withstand future shocks to the financial system. Analysts and experts have drawn comparisons between Deutsche Bank's current situation and the collapse of other financial institutions, such as Lehman Brothers, Bear Stearns, and Credit Suisse. While Deutsche Bank is not on the verge of collapse, its continued struggles have led some to question whether it can regain its former status as a leading global financial institution. Deutsche Bank's size and interconnectedness with the global financial system make its decline a cause for concern. The bank has significant exposure to various financial markets, including derivatives, bonds, and equities, making it a crucial player in the global financial landscape. If Deutsche Bank were to fail, the impact on other banks and investors could be substantial, potentially leading to a domino effect of financial instability. One potential consequence of Deutsche Bank's decline is the tightening of credit markets. As the bank struggles to maintain its capital position, it may be forced to reduce lending, which could lead to a credit crunch for businesses and consumers. This, in turn, could have a negative impact on economic growth and job creation, particularly in Europe, where Deutsche Bank is a major lender. Another potential consequence of Deutsche Bank's decline is the impact on investor confidence. As one of the world's largest financial institutions, Deutsche Bank's struggles have raised concerns about the health of the global banking industry. If the bank were to fail, it could cause panic among investors, leading to a sell-off in financial markets and a flight to safer assets, such as gold and government bonds. In the event of Deutsche Bank's failure, several scenarios could play out. One possibility is that the bank would be bailed out by the German government or another financial institution. This could help stabilize the financial system and prevent a broader crisis, but it would also raise questions about moral hazard and the role of government intervention in the banking sector. Another scenario is that Deutsche Bank could be forced to undergo a major restructuring, selling off assets and divisions to raise capital and streamline its operations. This could help the bank return to profitability and regain investor confidence, but it would likely be a lengthy and painful process. In the worst-case scenario, Deutsche Bank's collapse could trigger a global financial crisis, similar to the one seen in 2008. While this outcome is considered unlikely, given the increased regulation and oversight of the banking industry since the last crisis, it serves as a sobering reminder of the potential risks associated with the decline of a major financial institution. Deutsche Bank has embarked on a significant restructuring plan in an effort to address its issues and return to profitability. The plan, announced in 2019, includes cutting 18,000 jobs, scaling back its investment banking operations, and focusing on more stable revenue sources, such as private and corporate banking. These cost-cutting measures and restructuring efforts are aimed at streamlining Deutsche Bank's operations and improving its financial performance. However, opinions are divided on whether these efforts will be enough to turn the bank's fortunes around and restore its former prominence in the global financial industry. Some experts believe that Deutsche Bank's restructuring plan is a step in the right direction and that the bank's focus on more stable revenue streams could help it return to profitability. They argue that, with strong leadership and effective execution of its strategy, Deutsche Bank can recover and regain its position as a leading global financial institution. Others, however, are more skeptical, pointing to the bank's ongoing regulatory issues, damaged reputation, and the highly competitive nature of the financial industry as obstacles to its recovery. They argue that Deutsche Bank may struggle to regain the trust of clients and investors and that the bank's decline could be a long-term trend rather than a temporary setback. The potential long-term effects of Deutsche Bank's decline on the German economy and the European banking sector should not be underestimated. As one of Germany's largest banks and a key player in the European financial landscape, Deutsche Bank's struggles could have broader implications for the region's economic stability and growth. Credit Suisse, a Swiss-based financial institution, has faced a series of setbacks in recent years, including significant losses related to the collapse of Archegos Capital Management and the downfall of Greensill Capital. While there are similarities between the situations faced by Deutsche Bank and Credit Suisse, such as regulatory issues and involvement in financial scandals, there are also key differences that set the two banks apart. Firstly, Deutsche Bank has been more proactive in addressing its issues and implementing a comprehensive restructuring plan. As mentioned earlier, Deutsche Bank announced a significant restructuring plan in 2019, which included cutting 18,000 jobs, scaling back its investment banking operations, and focusing on more stable revenue sources. This strategy has shown some initial signs of success, with the bank posting a profit for the first time in 6 years in 2020. On the other hand, Credit Suisse's response to its recent setbacks has been less comprehensive, with the bank focusing primarily on damage control and management reshuffles rather than implementing a broader restructuring plan. Another key difference between the two banks is their exposure to specific high-risk situations. Looking ahead, the future of Deutsche Bank remains uncertain. Will the bank be able to regain its former glory and restore the confidence of its clients and investors? Or will it continue to struggle in the face of ongoing challenges and an increasingly competitive financial landscape? We hope this deep dive into the story of Deutsche Bank has provided you with valuable insights into the complexities of the financial world and the factors that can lead to the rise and fall of even the most formidable institutions. We'd love to hear your thoughts on Deutsche Bank's journey and its potential future. Do you believe the bank can make a comeback? And what lessons can be learned from its story? Share your thoughts in the comments below, and don't forget to like, share, and subscribe to Insight Vortex for more in-depth analysis on a wide range of topics in science, technology, and business. Until our next exploration, stay curious and keep seeking powerful insights.